Is GST 2.0 a scam? Who is actually benefiting from the reduction in rates? Is it the consumer, the production people, or the government? The 56th GST Council meeting has been done based on the fact that the one tax, one nation, the GST, is simplified to the common man, and also it increases the ease of doing business. Previously, there were multiple rates: 12%, 18%, 28%, 40%. There are multiple rates. Now they have simplified into two rates mainly: 5% and 18%, and an additional rate of 40% for luxury goods and other things which are considered not good for health. Maybe pan masala, tobacco, aerated drinks have been increased. The main focus of this council meeting was to increase the people's consuming power and also increase the demand on goods, simplify the tax system to make it easy for the people to understand. At the ground level, it looks like rate rationalization and exemption of GST for certain goods are benefiting the consumers more than the government, and it looks like the taxes are reduced and the consumers can now buy a lot more things. But there are a lot of practical difficulties which are going into, and there is also a scam part which is involved. It is not a scam, but there is a possibility that the consumers benefit is being plucked away by the producers or the retail people. So in this video we are going to mainly see about two different kinds of points which are put in by different kinds of industrial people and what is the reason behind it, and to truly understand the consumers are actually getting the final benefit out of the reduction in tax. The GST Council recommends that these rates will be applicable from 22nd September 2025. Now let's see the two perspectives of the GST rate cut and who is actually benefiting from them. Let's talk of the first perspective, which is consumer's perspective. Let's say a packet of biscuit before this rate cut was taxed at 18%. So now after this tax cut reduction in GST, it will be taxed at 5%. The current rate of this biscuit is rupees 10 inclusive of all taxes. Maybe let's take Milk Bikkies biscuit. You are purchasing this biscuit for 10 rupees. The total point of this discussion is that the benefit which you get may not be monetary and it might be in a different form, and let's see how it works. This 10 rupees biscuit, let's say it has 5 biscuits in it, and this 10 rupees was at 18%. So if we backwork this, the actual cost of this biscuit is somewhere around 8.47 rupees. Now this 18% has been reduced to 5%. So 8.47 rupees is the actual price of the product, plus now 5% after tax cut. 8.47 rupees plus 5%, it comes to 8.9 rupees. So this must be the rate, but is it practical for a companies to sell its product at 8.9 rupees for a packet? It is not ease of doing business. It is not actually practically easy. It must be a round figure for the company to make it easier to sell and also for the consumers to easier to buy. What the company will try to do, it will try to either increase the quantity or increase the quality of the product so that they can sell it in the same price in which it was earlier sold, that is 10 rupees inclusive of all tax. So instead of 5 biscuits, they will sell 6 biscuits in the same packet, or it will be something like 20% extra or something like that, and they will sell it at the same 10 rupees margin. Or they may say like they have added extra cashew nuts, extra sugar or something, they have added some kind of protein or something like that just to market it and to sell it at 10 rupees. The point to note here is there is a margin also involved, so that will also reduce. So even if you want to purchase 5 rupees, like 5 biscuits in that packet, you can't. So you need to spend 10 rupees to buy that packet of biscuit because they are selling only 6 in a packet. This is like a legal thing, like they can do it, they can show it. But what happens if Actually, the biscuit is not increased or quality is not increased, but let's say the manufacturers or the retailers decide that 8.47 rupees for 5 biscuits is wrong. Let's say they are increasing it to 9.52 rupees for 5 biscuits. 9.52 plus 5 percentage, it comes to 10 rupees. Now the same 5 biscuits which you purchased earlier is now still sold at 10 rupees, and thus there is no benefit to the consumer, and all the benefit which the government has given to the consumer has been taken away by the manufacturer or the retailer. This is known as profiteering, and section 171 of the CGST Act talks about profiteering and anti-profiteering. So basically the benefit which is given to the consumer is plucked away by the manufacturers and the sellers. A recent case which I noticed in another video is that the GST rate on insurance policies has been reduced to 0%, but what the companies are trying to do is that add-on, which generally comes with the general life insurance or health insurance policy, which was not shown separately, is taken out of the general category and shown separately, making the consumer believe that they are giving an additional benefit to the consumer, and thus the price of the insurance policy is same as before, which also comes under profiteering and which is not actually legally possible to do. And let's believe that all these cases are communicated to the right tribunal. If you come across any particular good which is still being sold at the same rate as before without increase in quality or quantity, you can make a complaint to the state screening committee or the standing committee. But how easy is it to actually complain that the prices have not been reduced and the actual benefit is taken out by the manufacturer or the retailer? Now let's talk about the FMCG point of view. Due to reduction in rates, the goods are going to be sold more. Let's take the same example as before. 5 biscuits were sold for 10 rupees. Now let's say they are increasing the quantity of the biscuits and they want to maintain the same 10 rupees price so that it is easy to do business. So now they have the benefit to push one more product of them to the consumer. So even if you want to buy 5, you are like pushed to buy 6 biscuits. You can't buy 5 biscuits for 8.90 rupees. You are forced to buy one more extra biscuit for 10 rupees. Now, as seen in that previous illustration, let's just assume the company is earning an extra 0.20 rupees per packet due to selling one biscuit extra. So let's just ask ChatGPT, what is the increase in revenue for the year due to sale of one extra biscuit in a biscuit packet? Let's say a company is earning extra 0.20 rupees per packet of biscuit due to reduction in GST before they were selling 5 biscuits in a packet.
3 days later.
I hope it has captured whatever I said the prompt correctly. So ChatGPT has made an analysis for us. Let's see. Increase in margin per pack is 0.20. Size of biscuits, cookies and crackers market, total market is 116,706 crores. And let's say a 10 rupees price point biscuit is 20% of this, and which comes to 23,341.2 crores. Number of 10 rupees packs sold per unit. In total, 2,334.12 crore packs are sold. Extra revenue for this 1 rupees packet is 466.82 crores per year. So this is the total increase in revenue for an FMCG company. It is also giving us different viewpoints. This may not be accurate, but I'm just trying to tell a point that this increases the revenue of the FMCG company, which may or may not be significant, but to the consumer, they are buying an extra good which is actually not required for them. This is just an illustration to help us find out what will be the impact on the FMCG companies, and let me know if you agree with this or not. This was a major point which was discussed in different reports and different pages. I also stand with this, and I feel this will happen, and it is positively impacting the FMCG companies more, and it is making us buy at the same rate an extra good which is not actually required to us. The same thing happens for all the different goods: shampoos, toothpaste, we're talking about biscuits, let's say cement, and also the insurance policy. Maybe they just add some add-ons just to show that they have added extra, but actually it is the same policy, but they are just eye washing us. The total increase in revenue to the companies is more, right? Actually, the consumer is not getting that much benefit which is actually visible, but there is a lot of things which is hidden, unsaid, and it is shown only to people who look beyond. The top points which we have covered is: one, the consumer might not get the actual benefit in monetary terms, it might be qualitative or quantitative. Number two, if both these things are not given, quantitative or qualitative increase in the product, then the company is plucking away the profit from the consumer, and they are profiteering, and they will be liable to anti-profiteering rules. The consumer can file complaints against these manufacturers or producers. Number four, the increase in demand and increase in revenue to the FMCG or other sectors, other manufacturers, which is actually hidden. Due to increase in demand, the extra revenue which the FMCG gets is significant, and also they will pay a part of it to the government as an income tax, which is also a benefit to the government. But at last, what is the actual benefit to the consumer? Will the consumer actually get the benefit, or is this all a high wash? What do you think? Is it a scam? Please leave your comments below of what you think about it, and thank you. I hope you enjoyed this video, and please follow me if you want more such videos and practical insights on things and day-to-day life.